Hello YouTube, Herman Williams with ATM Financial Services. Today I'm interrupting our series on retirement planning once again to touch on a few topics that may be of interest to you as we all grapple with how to deal with this horrible coronavirus. The longer this virus poses a threat to our health and safety, the more likely it is that it will also pose a threat to our finances as well. It has already had a significant impact on the stock market, and in the coming weeks it will likely have an even more personal impact on your finances whether you're invested in the stock market or not. Some of you may already be out of work due to this virus, and no one can tell you when you will be able to go back. In the meantime, you still have bills to pay and families to feed. So I wanted to spend a few moments talking about some of the things that may be on your minds. So let's start with what is being talked about in terms of financial assistance. I'm sure most of you have probably heard some talk about some checks possibly being sent out to help people get through these tough times. Let me attempt to break down what is currently being debated and how it might impact you. As of this recording, there are currently 3 slightly different proposals being debated in Washington. First, the Senate GOP plan includes the following: a one-time payment of up to $1,200 per person with an additional $500 per child. The payment will be based on income, so individuals making up to $75,000 annually or $150,000 in the case of married filing jointly would get the full $1,200. The payments would gradually decline for individuals making between $75,000 and $99,000. Anyone making over $99,000 or a family making over $198,000 would not get a check under this plan. Second, Treasury Secretary Steve Mnuchin laid out the White House's idea on Thursday. In this proposal, the aid would be distributed in 2 waves. The first wave would be $1,000 per person and $500 per child as soon as possible. Then 6 weeks later, the second wave would go out with identical terms if the president still has a national emergency declared. This proposal has not yet specifically identified who would be eligible, but Mnuchin has signaled an openness to limits. My guess is those limits would be similar to, if not the same as, the GOP proposal. Third, a group of Democratic senators sent a letter on Wednesday to Senate leadership expressing their views on direct payments to American households. They hope that the first payment would be $2,000 per American, followed by subsequent payments stepping down over time. Senate Democratic leader Chuck Schumer also expressed that from his side's point of view, any direct payments would be in addition to other proposals such as massive expansion of unemployment insurance or other ideas. We don't know yet which plan will get final approval or if it will be some hybrid of all 3. I believe that some compromise will be reached pretty quickly, as it is obvious that this virus is already having an impact on American households. So what else could you be doing to prepare yourselves for what might lie ahead? Well, I personally think you should seriously consider the possibility of losing your job due to an economic downturn or recession. Now, I'm not saying that to scare anyone, but the longer this virus hangs around, the harder it will be for businesses to recover. Even large companies who might even receive stimulus help will be looking for ways to cut costs in order to be profitable going forward. And what is the fastest way for companies to cut costs? You guessed it, cut jobs. So you should be thinking about how you will survive if the unthinkable happens. Hopefully you already have an emergency fund, but if you don't, you may want to watch my video on emergency funds and start setting aside funds now if you can. Something else you can do to prepare yourself for lean times is to get rid of credit card debt while you can. If you are carrying a lot of credit card debt or other debt and you find yourself out of work, it will be much harder, if not impossible, to make payments. Even if you are able to make the minimum payments on your credit card while out of work, the interest on those cards will be working against you and make it even harder to pay off this debt later. Not to mention it will end up costing you a lot more. If you are unable to make payments on some or all of your debt, it will also negatively impact your credit score, which could have long-term financial impact. Watch my video on debt freedom and develop a plan for handling your debt now. Another step you can take now is to review your monthly budget and look for places where you can reduce spending. Now may be a good time to cut the cord if you haven't already. Of course, I'm referring to cutting the cable TV cord. Now, every household is different, and I would not attempt to tell you what you need to eliminate from your budget, but my guess is that we all have some things that we could eliminate or stop doing if we had to. What I am suggesting to you is that you don't wait until you have to. If you find yourself in an extended layoff or you go back to work but have gotten behind while you were off, you may be looking for a source of cash if you don't have an emergency fund. If you have a 401k plan through your employer, you may have an option to borrow from your plan. Now, I will admit that as a financial advisor, I don't normally like to see people borrow from their retirement savings, but sometimes this may be the best option available to you. You can usually get a loan quickly and easily since it does not require any lengthy application or credit checks. There are no penalties for paying off the loan early, and it also provides a cost advantage over other types of loan. This is because the so-called interest that you pay on these loans is usually very low, comparatively speaking, and the interest that you do pay goes back into your account. So you are essentially paying yourself interest instead of a bank or other financial institution. I must warn you though about one potential pitfall associated with this type of loan. If you lose your job after taking out this loan, the entire balance is due at the time you leave. If you can't pay it back at that time, the full unpaid balance will be considered a taxable distribution, and you could also face a 10% federal tax penalty on the unpaid balance if you're under age 59 and a half. While that sounds bad, it's not the end of the world, and this may still be a better choice than some of the other more costly options you may have to choose from. Now, in the coming weeks and perhaps months, we will probably hear more about financial assistance programs that may be put on the table. If large numbers of people are out of work for extended periods due to this virus, there will likely be some sort of mortgage assistance proposed as well. In the meantime, work on what you can while you can. We will pick up our series on retirement planning next week. Please do all you can to protect yourselves and your loved ones from this virus. Practice social distancing and watch your spending. Usually I'm talking about financial behaviors, but this week I'm also talking about social behaviors. So until next time, behave well.